Tesla stock is down about 3.5% at the time of recording this video. And if you are confused to what's going on and why Tesla is underperforming today, there could be a couple of different reasons. But in fact, there's actually a lot of good news as well today, like Tesla doing another promotional interest rate for buyers of the Model Y in the US, as well as Tesla raising prices by a pretty large margin on the Model S and the Model X. Now, first and foremost, since we're already looking at the charts here, I should mention that Tesla tends to follow the technicals pretty well, and you were experiencing a short-term bull flag pattern. Now, when those bull flag patterns are recognized to the upside, they're powerful. When they're recognized to the downside, they're also powerful, and almost on a textbook kind of way, you're getting a rejection to the downside. So I do think the technicals are not helping us here. But the biggest reason why Tesla stock is likely trading down around 3.5% today is this. Trump in his speech last night said, quote, "I will end the electric vehicle mandate on day one, thereby saving the auto industry from complete obliteration and saving U.S. consumers thousands and thousands of dollars per car." Now, Trump did also go on to say that if you want to buy an EV, you can do so, and EVs have their role to play in the auto industry. But he did suggest that the tax incentives, the IRA federal tax credit, is likely going to be dissolved. And stupid Wall Street does what stupid Wall Street does. They say, wow, this is a new change. We haven't heard this before. This could be negative for Tesla. In fact, we already know it's not going to be negative for Tesla. It's going to be negative for Tesla's competition, yes, but not negative for Tesla. As Elon Musk said following these Trump comments, quote from Elon, "A surprising number of people think that Tesla survives on subsidies. That is true of our competitors, but not of Tesla." So again, I will reiterate what many Wall Street analysts, including Adam Jonas with Morgan Stanley, has said, and Dan Ives, just to name two, about this whole subsidy situation and a potential Trump presidency. Getting rid of the subsidies for electric vehicles and having Trump as the president, which is currently the forecasted odds if you look at any polls or betting sites out there, would actually be a positive for Tesla. Not to mention Elon Musk and Trump seem to be pretty cozy these days, aligning with a lot of the same ideology. Let's not get political, but I mean, a Republican presidency could actually be good for Elon. It could free up some regulation. It could help FSD enter into different markets. But nobody talks about that. So it doesn't surprise me. Stupid Wall Street does what stupid Wall Street does, and they hear these remarks and they say, wow, bad news for Tesla. And if you were someone looking to get back into Tesla stock, I think perhaps these are some pretty good prices to do so if you are not already heavily allocated to Tesla. And I will also acknowledge that Tesla reports earnings next Tuesday. So some people may want to book some profits before earnings and what could be a pretty crazy weekend. We actually see this continuing to affect markets, with markets trading lower today by about 0.5% on the S&P at the time of recording this video. It is being reported that Biden's family starts discussing his exit plan from the race, according to NBC. This comes after many reports that Biden could step down as early as this weekend. As I mentioned in the last video, this is a gray swan event. Do not be confused. A gray swan event is something we know can happen that maybe has a low odds of happening that could have negative repercussions on our markets. Now, I made a video about this last night, and a lot of people said, well, if Biden dropped out, wouldn't that mean Trump's odds would go higher of winning and thus cause markets to go higher because Trump policies are more favorable to equities and corporate profitability? One example, lowering the corporate tax rate. And the answer is no. Biden stepping down would not be good for Trump's odds of winning. It would not be good for markets. Number one, either way, whether you think it's good news or not for Trump, it would cause uncertainty because there would be someone else stepping up with different policies that we have never seen or experienced before. But from the market's perspective, from polling and from data, it would not be greater odds of Trump winning if Biden stepped down. That's because just imagine it like this. If you get a healthy, normal candidate that steps up, they're going to take more votes than Joe Biden. The Democrats are going to be more willing to vote for someone healthy, able-bodied. Now, in the grand scope of things, I don't think it's going to change much. I think people are fed up with inflation. People are fed up with interest rates. And what tends to happen during that environment, people tend to vote the opposite side, no matter what's going on. If this was a Republican presidency and these things were going on, they would vote Democrat, right? Very low odds that Trump loses, unfortunately, if you are anti-Trump at this point. It's probably best to just position your portfolio for a Trump presidency at this point. But in the near term, let's say Biden does step down over this weekend, it will cause more uncertainty, and markets absolutely hate uncertainty. Like, what's the corporate tax rate going to be under a different Democratic nomination? What's foreign policy going to look like? Tariffs and many other issues. So this is also affecting, again, broader markets, but it is affecting Tesla stock as well. But I will say, for the third and final time, stupid Wall Street does what stupid Wall Street does, and that's why Tesla stock was trading just recently in the 140s, 150s, 160s, and now we're back, well, to the 240s, as high as the 270s recently, and in my opinion, new all-time highs by the end of this year, but I'll talk about that more in the next video, and specifically why I think we're going to new all-time highs, maybe even as high as $1,000 by the end of next year. Trust me, you do not want to miss that video coming out at 8 p.m. Eastern Standard Time tonight. Ford is potentially benchmarking a heavier-duty F-150 Lightning EV with hub motors against a Tesla Cybertruck. It is being reported that starting today, Tesla is offering a loan rate of 1.99% APR for all new Model Y finance orders in the US. Promotional rate applies to finance terms of 36 to 72 months for new vehicles. Orders must be placed by August 31st, 2024 to be eligible and take delivery by September 30th. Tesla has increased the price of all Model X and S variants in the US by $2,000. Anytime a company raises prices, especially Tesla raising prices in this environment, that tends to be a pretty good sign for demand. That likely means demand is outpacing production. Tesla has announced that to enable additional Model 3 Performance and Model X all-wheel drive vehicles to qualify for the federal EV credit, they are offering complimentary paint options for Model 3 Performance and seating layout options for the Model X all-wheel drive if you add FSD to your order. This is a chart from S&P Global Mobility of US EV registrations in May 2024. You could see Tesla almost at 50,000 and the next highest competitor, which is Ford, at about 7,000. Harmony Energy has begun construction on France's biggest battery storage facility using Tesla Megapacks. The battery will be able to power 170,000 homes for 2 hours. The facility is on the site of an old power station which burnt fossil fuels for more than 30 years. And apparently Volvo's EX30 online reservation page disappears in the US. That could be part of this cyber attack that is currently going on. There's a lot of weird things happening today. Google Trends data for the Tesla lineup is showing a continued deceleration, besides for the Model Y that's actually starting to pick up a little bit from some of the earlier reported numbers from yesterday. The Cybertruck is now at 59, which is actually a little bit better than yesterday's numbers as well, I should say. But the Model Y is at 24. It was at 23 yesterday. The Model 3 continuing to decline, now at 22. The Model S at 10 and the Model X at 8. This is likely why Tesla is doing another promotion for the interest rate for the Model Y. Tesla's short interest of free flow is sitting at 3.79%. You have $26.21 billion currently sold short in Tesla stock, totaling 105.17 million shares that are currently sold short. And today, you don't have much going on in terms of shorting or covering. You have borrowed shares of 363,000, return shares of 210,000. That means on net, you do have about 154,000 shares that are being sold short today. But that's kind of a drop in the bucket compared to the volume we see on any given day or the overall 105 million shares that are currently sold short. Option activity today from big money is a little bit on the negative side as well. Who could blame them? We've had a big rally heading into earnings. We should expect to see some kind of profit taking or hedging heading into that event, in which that's part of what we're seeing today. You have seen 11 different orders totaling $5.81 million with a positive order value of 26%. Still better than yesterday, where you had 7 different trades totaling $30.66 million with a positive order value of, get this, 1%. The VIX today is up 3.5%, continuing this spike from 12 to 16.49. As of July 17th, just 2 days ago, bullish investors were at 52.7%, neutral investors at 23.8%, and bearish investors at 23.4%, according to the AI Investor Sentiment Survey. On StockTwits, which I like to use as a retail investor sentiment gauge, because let's be honest, big money is not getting on here writing comments about Tesla or any other stock for that matter. So it gives you a really good gauge of just retail investors. Sentiment today for Tesla is bearish at 31. Yesterday it was bullish at 61. But as I have pointed out many of times here on this channel in the past couple of weeks, most of this rally you have seen with Tesla, you've actually seen bearish retail sentiment. So I think retail is still looking to get allocated back to Tesla after selling out at lower prices. And I think that's why, you know, a lot of retail investors have been bearish in the last couple of weeks. Not that they're necessarily bearish on Tesla, but they're just pissed off because they missed the buying opportunity and just watched Tesla stock rally for like 13 days in a row, and probably even bought puts in that time frame, right? After being so used to Tesla just getting destroyed on any random day, that just did not happen as of lately. Message volume is normal at 48 today, compared to 45 yesterday, so a little bit higher message volume today, and participation ratio today is high at 55. Google Trends data for full self-driving is down to 18, which is actually a little bit higher than yesterday when it was at 17, and this data is partial, it's not complete yet. That is, though, I should mention, in line with what you've seen before the free trial started. So I think a big question of this earnings is, what's the new take rate for FSD? Can we start to get that metric reported to us on the earnings? That would really start to highlight a lot of Tesla's AI capabilities, and I think that would cause a decent amount of excitement for Tesla stock investors, because right now it's almost impossible to judge the specific component of AI within Tesla's business. It's just rounded into the other numbers, the services number. With that said, Tesla continues to run about 4,000 different ads with Google, and global inventory numbers are rising yet again to about 6,100 for the Model Y, Model 3 at about 4,400, Model X at 3,200, and the Model S at about 2,800. 10-year Treasury yields today are also up about 4.5 basis points to 4.23%, which is putting some downside pressure on areas like small caps. 10 and 2-year yield curve inversion is still continuing to uninvert. You are now only inverted 26 basis points as of June 20th. For an example, you were inverted 45 basis points. So actually, when you see this uninversion, that's when you tend to get pain in markets because it reacts to the Fed's policy. So when the Fed starts to think about cutting rates, when the markets price that in, you tend to get that uninversion, and you tend to get pain in the markets when you uninvert, because historically speaking, the Fed, when they cut rates, there's pain in the economy and there's pain in the markets. That doesn't have to be the case, but that is the precedence that we have. When you uninvert, it's usually when stocks do poorly. And as you can see here on CNBC, the biggest story is this update from CrowdStrike that caused one of the world's biggest IT blackouts. There's been a lot of speculation about a cyber attack, which is what I believe I said at the beginning of this video, because that's what I heard. Apparently, it is just an update from CrowdStrike that caused this. And some people are actually saying on Wall Street this could cause real GDP problems. This could actually be a hit to the economy. Because it says here, CrowdStrike IT outage hits global supply chain with air freight facing days or weeks to recover. So this situation could also be having a negative impact on broader markets. Here today, oil is down about 1%, TLT is down 0.5%, and the dollar is doing a whole lot of nothing today. CNN's fear and greed indicator is neutral at 50. So like as neutral as you can possibly be. Market momentum is greed, stock price strength is fear, stock price breadth is fear, put and call options extreme greed, market volatility extreme fear, safe haven demand neutral, and junk bond demand is greed. According to Fed Fund Futures contracts, you are pricing in a 49.6% chance of 3 cuts by December 18th, 2024, and 42.4% odds of only 2 cuts by December. Markets are pricing in almost a 100% probability of your first cut coming September 18th, 95% chance of at least 1 cut by September, and 3% chance of 2 cuts by September. That means there's a 98% chance of at least 1 cut by September and about a 1.9% chance of no cut by September. November is pricing in at least 2 cuts, so a cut potentially September and November, and then another cut in December. The percent of stocks trading above their 50-day moving average is now back down to 63%, still a pretty healthy level. 63% of stocks are currently in active uptrends. This is about 3.72% of stocks breaking under their 50-day moving average today, compared to where we were recently just a couple of weeks ago at 35% or so of stocks trading above the 50-day moving average. You're still looking good, but now there's just more room for downside given the breadth thrust that we have seen recently. And as far as Tesla stock, like I said, on a technical basis, you broke the bull flag to the downside. That likely means a retest of this 20-day moving average could be coming. That's around 230 or so. The only thing that really matters, in my opinion, on the technicals to the downside is if we stay above this longer term downtrending line, and that's at about 225 or so. And each day you stay above this trend line does trend lower. So for an example, by September, this trend line is going to be at about 216, 217. So each day we stay above here, it gets better and better. And let's be honest, heading into Tesla's earnings next week, this 4% decline likely sets Tesla up for an upside surprise. I still think the estimates are too low. I think Tesla's going to beat on profitability. I don't think the interest rate buy down is nearly as impactful to profitability as Wall Street thinks. And I think the increase to FSD subscriptions and people that just outright bought FSD is going to more than offset that. Not to mention Tesla's continued operational efficiency with COGS being lowered pretty much every single quarter. That is cost of goods sold. The dollar amount that it costs Tesla to make a Tesla, in other words, has been falling every quarter, and that probably is the same for last quarter. But on a technical basis, some people are going to point out the MACD did just curl down and went negative. Now, when the MACD line goes under the signal line, that tends to be a short-term negative. MACD line at 16.71 and signal line at 17.63. So that did happen. I'm not going to draw too many conclusions to that. Doesn't have to be a big negative or big deal overall. Can be sometimes, but doesn't have to be. You can see the RSI is now at 59.03, which is a much more neutral level. So let me know what you think about all of this information down below in the comment section of this video. Tesla stock, to end off this video, is at about $239 per share, down almost 4% today. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.